As TSLY falls to $8.70 and CONY falls below $20, maybe some of you are beginning to understand what I've been saying about the problems with these funds. Stick around, I'll get into the details a little bit as I get along in the video and see what you think and if you're enjoying them or if you're having the same problems I see. Good morning. My name is Adam Kahn and I'm the Rational Investor. I hope you're all doing well. Today is Friday, January 26th. Before I forget, before I get into TSLY and CONY, do me a favor, if you haven't already, hit that subscribe button, smash the like button, make some comments in the video. Hey, Winston, I really appreciate the support, and that helps YouTube's algorithm. It helps other people find the channel as well, helps it grow. And like I've said, I've been so excited to see how we're doing. I think we're up to 3,200 subscribers or something, and it's really cool. I appreciate that. Thank you, guys. So what I've been saying about TSLY and CONY and the other Yieldmax funds is exactly the problem we're going to see now. As Tesla, the underlying stock, has fallen in TSLY, you've seen the price of the fund obviously drop as well. And then here's the problem. They're using synthetic options to be long the stock, so you have the full downside risk, less the calls they've sold to offset it a little, which is what Jay, the used car salesman, sells as, essentially the yield on the fund. The problem is now that Tesla is going to close around, last I looked, it was $183. Wherever it closes today, when they go to sell next week's options, they're going to adjust for the new price and sell lower priced options in order to get that yield, which is why it's referred to as Yieldmax. What that does is that limits your potential to be able to get the growth or the loss that you had in the stock price. It's going to pin it down to where it is so that even if Tesla goes higher, your fund is not going to go that much higher. And now whatever your new investment is based on today or Monday, you're going to get the return based on the new valuation. So if you were buying it at $14 or $15 a share, and now it's down to 8 and change, well, if you were making 20% return, you're now going to make 20% return at the new value, which is a lower price. That's what I don't like about these funds, is you have that downside risk, but if it goes lower, it's not like you have the potential for the upside growth of the underlying equity. If you just own Tesla, I understand you would also be getting beat up because the share price has gone lower. But if it goes higher, now, keep in mind, this is not financial advice. I'm not even making any prediction on Tesla. I'm just explaining the ups and downs of the market. If Tesla went higher and you owned the underlying, you would then make that profit back. But now if Tesla goes higher, you're just going to cap out at the yield you can get from the calls they've sold. You really are limiting your upside growth and only capturing the downside. So if and when a stock goes lower, you'll get beat up pretty badly. You'll readjust the valuation of the fund you own, and then it's like starting over at that new price where now you'll get return from there. I'm not sure why people are talking about a reverse split. And even if he does do a reverse split, that doesn't really help you. It just changes the price of the ETF. You'll have half the shares or a third, or depending on what the split is. It's not like now you just get a new higher price. Splits are just for different reasons. They don't change your value. And I'll go over again exactly what they do for the funds, how they work. So what they do is they sell an at-the-money put and they buy an at-the-money call. If the stock goes lower by being short the at-the-money put, you're required to buy 100 shares for each put that you're short of the stock, the underlying equity. In TSLY, that's Tesla. So Based on today's pricing, you're probably selling the 182.50 puts. And forgive me, I'm not looking at the options quotes, so I'm not exactly sure if it's correct or if there are other ones that are closer or not. And you'll buy the same call, so you might buy the 182.50 call in case the stock goes higher to be long the stock. So either way, you're going to be committed to being long approximately 100 shares in this example of Tesla. They'll then sell, and based on what I read, about a 5% difference, maybe 10, call to create your dividend against the call that you're long. So maybe you sell a 195 or 192.50 call to collect some premium, and he does it on a weekly basis. And that means if the stock goes up, you're capped at whatever call you've sold. But if the stock goes down, since you've sold the put and you haven't done anything on that end to protect you, you will just have a loss to the downside from being long the 100 shares you were committing to buy by selling the at the money put. Does everybody kind of understand that? That's the risk in the strategy. Now, please understand, I have no issue with buying stock and selling calls. I have no issue with selling puts to get long a stock. I just have a problem with a fund selling it as a potential way to get income without really explaining the risks of that funds to the people buying it. Because my guess is if you're getting your retirement, you're super attracted to see 20% yield, 30% yield, or whatever the numbers are that look really attractive without realizing that you're taking on some significant risk. I don't have a problem with people doing that. I have a problem if they don't understand it and seeing these things as good opportunity to make better dividends than buying something that might have a lot less risk. There are tons of options out there. And like I said, this is not financial advice, but you really should seek out an advisor or somebody who understands them that can help you pick what makes the most sense to match what your goals are for your investments. I mean, obviously, all of our goals is to make the most money possible. I just think that this fund is a little deceptive in how it gets shared. And there's one guy in particular who I've seen his videos talking about to margin your account to get long these because your margin price is only going to be a certain percent of cost and you're going to get so much more in the dividends. Like, how could you lose? Well, I'm guessing over the past few weeks, you've seen how you could lose. Like, you really could lose significantly because my guess is the dividend that you're going to receive is not going to make up for how much the stock has fallen. Now, it might going forward, which is why I say it's not financial advice, and maybe Tesla ends up going back higher. Maybe TSLY can drift back up to $9 or $10. But the guy who explains it, the fund manager, he's very clear about his goal is not to increase the value of the ETF. His goal is to get you yield. So now that it's readjusted its price, the goal is not for the ETF to go higher in valuation. The goal is just to continue driving the dividends. So the loss that's been taken on has pretty much been taken on. There is no goal to get that back. So the dollar cost averaging thought, and when he suggests just putting it in a drip, or basically that's dividend reinvestment, to just continue to put more money into it, in my mind, defeats the goal of getting that dividend to help pay whatever it is you were hoping to pay. Like, if your only way of potentially keeping up is to do dividend reinvestment and you bought the fund to get the dividends, I'm not really sure I see how that connects. Anyway, again, do me a favor. I hope I explained how those funds work. I hope people understand the risk. I'm not trying to be negative because every investment has a reason for it. And I'm not saying it's a bad investment. I'm just saying I hope you understand what it does and where the value is, and hope that it matches, or you recognize whether it matches or doesn't match your investment goals. So again, Adam Kahn, Rational Investor, thumbs up, subscribe. Make comments. Tell me why you love the fund and I'm an idiot and I don't know what I'm talking about. I'm happy to discuss it. Have a great weekend. I'm sure I'll talk to you tomorrow or the next day.